Neal, you've got some topics here just to kind of check us in, and I think it's going to be great for people here to learn a little bit about how things are going across the country, but then also take some lessons to maybe apply here.
Yeah, exactly. So I think my objective with today, Matt, and just for everyone listening, is to kind of discuss what the difference is when the market's not like what we have. We've almost forget now because it's been almost 2.5, 3 years of strong market growth. It's been 2 years of like ridiculous market growth and about 3 to 4 of like consistent growth. And so people are starting to forget what it means. And there's been so many new people who are just entering, like young buyers and people that this is all they know. So they kind of assume that this is what the market is. So I think today what we're going to try and do is chat with Matt and get his take on the market that he's dealt with, where it's been like you said to me, Matt, it's been flatlined for a lot of years, and there's even been years where you've seen people, they buy a house and then they go to make their transition, and as unfortunate as it is, they might have to sell at a slightly lower price point or the equivalent price point to what they paid, and so that's something we want to talk about. So I guess right off the hop, like we talked about really quick here, our inventory level right now just got quoted at 1.7 months. And I don't know if you have the exact number there for yourself, but what are you seeing right now? And you said things are ticking up there now, but what are you seeing on the inventory side of things and pricing?
Yeah, so we basically in 2012, we peaked out. And then we saw a significant correction down, about 25% citywide in terms of
25?
prices. So fairly substantial. And we'll break into that a little more. 25% was our citywide benchmark price change.
Damn.
Negative 25%. But yeah, we can break into that a little later. In terms of where we're at market right now, we finally, in about the end of 2019, started to kind of hit a little bit of an upswing. We're right now in the city of Regina about 3.5 months of inventory, which for us is very low.
Yeah.
There's many months where you're 6, 7, 8 months of inventory sitting out there. So to be in that position is very different for us for the last few years. It is segmented though, single family homes, and for us, price points of about $350 to $500 is still really hot and only about a month or two of inventory, whereas other segments, it's more like 4 or 5.
So tell me, I always think of Halifax as really unique because its main driving force is the fact that there's a peninsula surrounded by water on 3 sides. So real estate values there are always really, really strong. And then there's the fact that we've got the military, we've got the universities, we've got the hospitals, we've got big government, public sector. What are kind of the driving forces in your market?
So Regina is a government town too, provincial capital and a lot of federal government jobs, RCMP barracks there, but we are very heavily commodity driven. So obviously the agriculture market, everybody thinks about that. We have a significant oil market as well. Potash is another one, which is used as a fertilizer. We also have a significant energy market in uranium as well. And agriculture isn't just wheat crops as well. We do a ton of pulse crops, so lentils, that type of stuff. It's something like a third of the world's lentil supply just comes out of Saskatchewan alone.
Get those lentils.
Lentils from Saskatchewan? Really?
Yeah, if you're looking for lentils, most likely they're coming from Saskatchewan.
I like lentils. This
is why I've always worried about some of these other markets when people ask me about Halifax, boom, bust, and why did we never go through any big swings until recently? Like we were always like this. And it was because we were driven primarily by things that, boom or bust, whatever's going on in maybe the private economy, the commodities, like we weren't super affected because those hospitals aren't going anywhere, those universities aren't going anywhere, and so on. But the 2012, was that like petroleum based?
A whole bunch of things kind of hit us at the same time. So 2012, obviously, oil, that was basically the peak of the oil market. And then the other big export that we have is potash. And there is a kind of a Canadian conglomerate that, for the most part, acts as a cartel in the country here and exports potash, but also overseas there was a Russian/Eastern Bloc cartel that fell apart, and all of a sudden they started flooding the market, and that tanked our potash prices. So we got hit with those two, and then we got hit hard with lentil exports. We lost the biggest export market we have, which is India. In 2015, there was a little bit of a political snafu that really hurt our exports. They put massive tariffs on. So we kind of got kicked a few times in a row with our commodity market.
Man, that's so interesting to me because there was the fisheries that drove the economy here for a long time, and there was mining and things like that. And then we slowly got away from that. Like we're reliant.
Very government reliant at this point now, which is that's why I think we've always just kind of paced inflation because it's almost like government hands out inflation-based raises.
Yep.
And our other big industries, like, so we have shipbuilding here.
Yeah, and we had a spike in
But-
2012 because we got this big contract and people thought they were going to get
And-
rich, but it wasn't that big of a thing.
No, but it is one of the bigger private employers here.
Yep.
And it's in the subsidiaries to the
Yep.
shipbuilding. But realistically, the contracts are government awarded. So it kind of is another government
public
base.
money, yep.
It's basically public money that's funding that entire operation.
Yeah.
So I think that's what's always kind of kept things
Oh my gosh, I should say that
kosher.
Our container and our shipping, our port is a huge part of our business
Very
too,
true.
right? And then with all those things, because they've come together, we became kind of the commerce capital of Atlantic Canada. And then most recently this year, I don't know what, like in 2019, we started to come up with, because of improved immigration and like lower boring rates, and then of course the pandemic hit and stuff. What do you attribute your last little rise to?
Yeah, I
you
was
said
gonna
since
say, what's
2019.
made that change now that's causing things to...
A big part of it is just we finally hit bottom. I think the economic conditions that were hurting us, oil basically bottomed out in prices and is slowly, outside of recently, has been kind of slowly recovering, or people just got used to the new normal on that. We have had some strong years of agriculture. Pulse crops, again, same thing. We've kind of stabilized there. Potash, like all of those things that got kicked in, down the road quite a bit or beat up on prices, we kind of just hit that new bottom price and it's slowly been working its way up. So people have got used to that. That was a big difference there. So just, okay, if we're dealing with $60, oil, now we know how to deal with $60 oil. That's been the big
Right.
thing.
You learn to stabilize at that point. Now, and you're saying that bottom price. What is like your market average right now in Regina for price points?
So composite benchmark price for everything put all together is about $275. But if you want to break
Okay.
it out to all the individuals, I've got it right here. So single family is about
Yeah.
$280. Townhouses is about $230, and apartments about $180 there for that.
So
Wow.
when you're talking to buyers in a market like this, because I can imagine it's hard conversation with the sellers, depending on you're up, you're down, you're sideways, whatever. But when we're talking to a buyer in this situation, what do you tell them about? Is this an opportunity? Do you view the idea of home ownership differently? Because when you were able to say, hey, listen, you're going to put along at your 3% a year, it's easy to explain to a buyer the merits of purchasing. But what about in a market like yours? What can you tell them right now?
Well, right now is different than the conversation I was having 2 years ago when prices were declining, and that was a completely different conversation. But, now it's okay, we're finally through that ugly rut that we had where prices were declining, and that was, you were pretty apprehensive about buying maybe, and you were making the decision to buy because it was a lifestyle choice versus an investment choice. Now it's okay, I'm going to buy a house, and we're finally in a position where the house is going to appreciate, or it sure looks like that's the direction things are going.
Interesting.
Yeah.
Yeah, so I guess because I mean now like it's so easy now. Everyone wants to get in because everybody knows somebody that's made a bunch of money on their home, or the idea everyone's like the idea of renting is so stupid because of our rental rates going to where they are. I guess the sentiment would have been very different for you guys, where people probably would have seen a lot more merit. Because the other thing is rental rates are probably a lot more reasonable. Like I don't know, what would you say an average clean let's say a 1-bedroom and a 2-bedroom would go for in a decent location, not hard of downtown, but also not in a grade C neighborhood.
So like a newer townhouse, 2010 type thing, 1,000 square foot, 2-bedroom, 2-bathroom in a pretty good neighborhood. 1,300 would be a giveaway on it. 1,500, 1,600 would be kind of probably the higher end of that. Utilities would be on top. So that's a pretty nice place.
Yeah, that's not. That's actually not. I thought it was maybe a little cheaper than, to be honest. That I guess for as an investor, you're getting a reasonable return.
I guess when you consider that our average house price in Halifax proper is probably double what you're saying for your benchmark composite there, the rents kind of bear, like your rents actually might be closer to home ownership prices than ours.
Yeah.
Which makes sense because people buy here a bit on an upswing projection. Like we're having a difficult time now, more so telling buyers that, hey, this may not be going to pull back, at least not in the near future. We have some buyers who are saying, well, I don't want to get in now. Maybe I should wait till this thing goes down in price. I'm kind of like, I don't really know when that's going to happen. So these are some of the conversations we're having. What do you tell people, even buyers or sellers, when things are falling and, you're trying to catch a falling knife here?
When we were going through that declining market, it was tougher as an agent. Okay, now you got to wrap your head around, instead of, you guys are in that get them the darn house, because if you don't get them that one, we got to go find another one. Whereas for us, it was, I got to get these guys as good a deal as I possibly can price point wise. And then also talking, okay, don't just buy the first house you find type of thing. You want to look for houses that are in good neighborhoods, that have something that's desirable about it. Maybe you're back in a park, you're close to schools, you're on a quiet crescent, you know, that type of thing. Because even in a declining market, those houses still sell well, and they sell for better prices. So like I said, we dropped 25%. If you look at different areas, the core of our city, which is a rougher, high crime neighborhood, the prices there easily dropped 50%. Whereas higher end neighborhoods maybe dropped 8%. So big difference there in terms of what happened. So if you were buying in a nicer neighborhood, not on the busy street, that type of thing, you definitely got impacted a lot less.
So did suburban sprawl fare better or worse during this? Like, could the cookie cutter, they're all the same, but they're new?
We got overloaded in condos more than anything else. Single family, we were still high there, especially 2 stories. But the condo market was what got absolutely hammered, pretty much everywhere. And where they got hit the worst was anything that was an apartment rental converted to condos, 1960s era, 1970s era stuff for us. Those got all converted during the boom. People made a pile of money. I remember when I first got in the business, I had a guy, we were selling one. $175 was the sale price, and he was so mad because I am giving this darn thing away. He was just pissed off even having to accept that offer at $175. And today that same place is $105. So those guys got absolutely beat up.
Do you see a lot of foreclosures in that then? Like, is there a lot of bank repo homes and stuff?
Yes. So Saskatchewan actually still sits the highest foreclosure rate in Canada. We're about 0.8% foreclosure rate. It is heavily skewed, though, to Prince Albert and Estevan. 0.8%.
Okay.
1 in every 100.
So that's our, and then of that, typically, that's delinquency rate, not foreclosure rate. And then of that, about 50% actually end up in foreclosure. But like I said, it's skewed heavily to Prince Albert and the Estevan areas. Prince Albert, you've got a heavy logging sector there and forestry. And then obviously Estevan is heavy oil influence there. So those 2 sectors got hit really hard. Regina, Saskatoon, not nearly as much. But in terms of what is that in real numbers, 0.8%, it's about 1,000 properties.
How the hell can anyone build a new property at these price points?
Do they do is there new construction? Are there new homes?
New construction got crushed when things went sideways. There was a point I was joking that the builders, it was like the Oprah Winfrey show, because you could get everything. You were getting your deck, your fence, your landscape. There was literally at one point they were giving away cars. I'm not even kidding. And a CMHC came in and said, you got to stop doing that. You can't give away a car with the purchase of a house. It can be a draw, but it can't be just buy a car, buy a house, get a car. So it was really tough as an agent to compete against that, because these new houses were going for everything with it included. So as a buyer, you're going, well, heck, why would I buy the used house when I could buy the brand new one and get a car?
So here, the builders now won't even build the freaking house. Now they sell you the contract, and they're
my God.
6 months later, we're not going to build it, and we need an extra $50,000. And you're like, I'm sorry, what?
When I was broke, I had rich habits.